Welcome to the Deep Dive. Imagine you're an F-1 student in the US. You're working hard, maybe on campus, and that first paycheck lands. You might see deductions, federal tax, maybe even Social Security and Medicare. It can feel a bit, overwhelming, maybe even a bit worrying about how much of your hard-earned money is actually going to taxes. But what if I told you that for many Indian F-1 students, almost all of those deductions could potentially be recovered? That you might be entitled to keep significantly more of what you earn. That's the surprising reality we're diving into today. The tax essentials and these really critical benefits for Indian F-1 visa students here in the U.S.
That's such a crucial point because understanding these tax nuances, it isn't just about, ticking a box for compliance.
Right.
It's really about empowering yourself financially. It means tapping into significant benefits that can directly put more money right back into your pocket. And it helps you avoid common and often pretty costly mistakes that, many international students unfortunately fall into.
Yeah, you hear about those.
So our goal with this deep dive is to really cut through all that complexity. We want to deliver clear, actionable insights you can actually use.
Absolutely. Our mission is to unpack the specifics. U.S. tax laws as they apply to you as an Indian F-1 student. Everything from those game-changing treaty benefits to the exact filing procedures.
Yeah.
We want you to feel well-informed, confident about your tax obligations, so you can focus on what you're here for your studies, not tax anxiety.
Exactly. Less stress is always good.
So let's unpack this with something I found really eye-opening. Indian F-1 students often get significantly better tax benefits than students from many other countries. It's not just a small saving. People say it can be a real game changer for your finances. How does that actually work?
It is pretty remarkable, actually, and it's all thanks to Article 21 of the U.S.-India Tax Treaty.
Article 21, okay.
Yeah, this treaty offers two major advantages, and they combine to create some incredible relief. First, you get the ability to claim the standard deduction.
Just like a U.S. citizen.
Exactly, just like U.S. citizens. And for the 2024 tax year, which is the one you'll file in 2025, that amount is a pretty generous $14,600.
Wow, okay, $14,600.
And second, there's a specific $5,000 income exemption. This is just for students, teachers, or trainees during their educational stay. It's like a special carve-out just for people under the treaty.
A $5,000 exemption plus the standard deduction.
That's right.
So for the typical F-1 student, maybe working part-time on campus, how do these two benefits really add up? What does it practically mean for their federal tax bill?
Well, the powerful combined effect is that for most low-income F-1 students, especially those with those on-campus jobs, this often means owing a grand total of $0. $0 in federal tax.
Zero? Seriously?
Seriously, let's just run a quick example. Say you earn $10,000 a year from an on-campus job.
Okay, pretty typical maybe.
Right. First, you subtract that $5,000 treaty exemption. That leaves you with $5,000.
Got it.
Then, from that remaining $5,000, you also subtract the $14,600 standard deduction.
Which brings you below zero.
Exactly. It brings your taxable income down to zero. So what this means is any federal taxes that were withheld from your paychecks during the year, they should be fully refunded to you. Fully, provided, of course, you file correctly. It's like finding extra money you didn't even know you were missing.
That sounds almost too good to be true. It really highlights why understanding these rules is so important. But I'm curious, are there any situations where an F-1 student from India might still owe federal tax, even with those benefits? Like, is there an income level where they start to phase out, or...?
That's a fair question. And, there are always nuances, but honestly, for the vast majority of F-1 students with typical on-campus jobs or, say, research assistant stipends, these benefits will likely cover all their federal tax liability.
Okay.
You typically only start owing federal tax if your income significantly exceeds that combined $19,600. The $5,000 treaty exemption plus the $14,600 standard deduction.
Right, the $19,600 threshold.
Yeah. So for most students, that $0 federal tax bill is a very real achievable outcome.
When I first looked into this, I just assumed income was income. Simple. But then I stumbled upon how the IRS actually classifies F-1 students, and wow, it fundamentally changes everything about how you file. Could you explain this crucial distinction, the one between being a resident alien and a non-resident alien, and why it's such a game changer, particularly for F-1s?
You've absolutely hit on a core principle there. For tax purposes, the IRS generally considers you a non-resident alien, often abbreviated NRA, for your first 5 calendar years on an F-1 visa.
First 5 years? Okay, NRA.
Right. And this is critical because it dictates which tax form you use. As an NRA, you'll specifically need to file Form 1040-NR. The NR stands for non-resident.
Not the regular 1040 form most people hear about.
Exactly not. That's the common mistake. Now, after those initial 5 calendar years, your tax status typically shifts. You become a resident alien for tax purposes. At that point, you would then file the more common Form 1040, just like a U.S. citizen or green card holder. But those first 5 years, 1040-NR, the forms are quite different, and using the wrong one, well, that can mean missing out on your treaty benefits entirely, or even causing issues down the line with the IRS.
Okay, so we've unpacked these amazing benefits, this potential for $0 federal tax, which is just fantastic news for many students.
It really is.
But here's the crucial next step. Even if you figure out you don't owe a dime, the IRS still expects to hear from you, right? You still have to file something.
Absolutely.
So what exactly do you need to send them, and what are the deadlines?
Yep, filing is mandatory even with zero income. You need to file your taxes every year by April 15th. That's the main deadline, though you can apply for an extension if needed.
April 15th. Got it.
As for the forms, you'll need a few key ones. First, Form 8843.
88843.
This one is absolutely mandatory for all F-1 students, even if you earned absolutely nothing. Think of it as just letting the IRS know you're here legally on an F-1 visa and claiming days of presence exemption.
Okay, just a status form, basically.
Pretty much. Then there's Form 1040-NR. That's your actual non-resident tax return. This is the form where you officially claim those valuable treaty benefits we just talked about, the standard deduction and the $5,000 exemption.
Right, the important one for getting money back.
Definitely. If you had an on-campus job, you'll also need your W-2 form. That comes from your employer. And if you received scholarships or stipends, you might get something called a Form 1042-S.
1042-S, okay.
Lastly, you'll need either a Social Security number, an SSN, or if you don't qualify for one, an Individual Taxpayer Identification Number, an ITIN. You need one of those to file.
SSN or ITIN. And are there tools to help with this? It sounds like a lot of forms.
There are. Tools like Sprint Tax or Glacier Tax Prep are very commonly used by international students. They're particularly helpful because they're specifically designed to handle things like the Indian Treaty exemptions automatically. Makes life much easier.
That's good to know. Okay, now let's tackle something that seems to cause a lot of confusion and, frankly, often leads to students unnecessarily losing money. Social Security and Medicare taxes.
FICA taxes.
Why, yes, FICA.
Are F-1 students exempt?
And crucially, what do you do if you see them mistakenly withheld from your paycheck?
This is a huge one, and yes, it's a common point of confusion. Let me be clear. As an Indian F-1 student, you are explicitly not required to pay Social Security or Medicare taxes, FICA taxes on income related to your F-1 activities, like on-campus work.
So definitely exempt.
Definitely exempt for that type of income. Now, if, by chance, these taxes are accidentally withheld from your pay, and believe me, it does happen, your first step should be to talk to your employer.
Go straight to payroll.
Exactly. Request a refund directly from them. Often they can correct the error and refund you the money.
Okay.
If for some reason that does resolve it, or maybe they say they can't fix it after the year ends, then you have another option. You can file Form 843 directly with the IRS.
Form 843.
Correct. That's the form to claim a refund of taxes that were erroneously withheld. The key takeaway is, don't just let that money go. It's yours.
Good advice. Now, many students rely heavily on scholarships and assistantships to fund their education. It's a lifeline for so many.
Absolutely.
So how does all this tax stuff apply to scholarships and stipends? Are they considered taxable income? And how do those treaty benefits we discussed play into this?
It's an excellent question, very relevant. Generally speaking, tuition waivers themselves are not considered taxable income. So the portion of your scholarship that directly pays your tuition fees, that's usually tax-free.
Okay, that makes sense.
However, stipends and assistantships, basically, the money you receive for living expenses or for doing research or teaching work, that is technically considered taxable income by the IRS.
Ah, so it is taxable.
Technically, yes. But here's the good news again, thanks to the treaty. That income is very often fully covered by that $5,000 treaty exemption we talked about, plus your standard deduction.
Ah, so even though it's taxable, the deductions wipe it out.
Exactly. So even if they are taxable in theory, the actual amount of tax you'd owe is usually very low, often zero, because of these generous exemptions. It loops back to that potential $0 federal tax scenario again.
That's reassuring. Okay, shifting gears slightly. Beyond what you might earn here in the US, there are also rules about money coming from home. For parents in India who might be supporting their children studying here,
Yes.
what do they need to know about sending money from India to the US? I've heard about LRS rules and something called TCS.
Right, LRS and TCS, good points. India's Liberalized Remittance Scheme, or LRS, allows individuals, including parents, to send up to 250,000 US dollars per person per financial year outside India. That's quite a substantial amount.
$250,000 per person. Wow.
Yeah. Now, about TCS, banks in India might deduct something called tax collected at source, or TCS. Currently, it's often 5% if the total amount you're sending for education purposes exceeds 7 lakh in a financial year, though rules can change.
5% tax collected. That sounds concerning.
It does sound concerning. And many students and parents understandably panic when they see TCS deducted on the bank statement. They think it's a tax they've just lost.
Yeah.
But here's the crucial part. This TCS is typically fully refundable back in India. It's not a final tax payment saying goodbye to your money.
Oh, refundable. How?
It's more like a temporary hold or an advanced tax collection. The person who sent the money, usually the parent, can claim this TCS amount back as a refund when they file their income tax return, their ITR, in India.
Okay, so parents just need to make sure they claim it on their Indian tax return.
Exactly. Keep the documentation, claim it on the ITR, and they should get it back. It's not lost money.
That's a huge relief, I bet, for many families. Okay, so we've covered the what and the why, the benefits, the rules. Now let's try to walk through the actual filing process, step by step. Make it feel a bit less daunting for someone maybe facing this for the first time. What's the roadmap?
Absolutely. Let's break it down. Think of this as your checklist for tax season. First, just remember the timeline. The U.S. tax year is January 1st to December 31st. The filing period is generally from mid to late January until April 15th of the following year.
Okay, Yan to Deck file by April 15th.
Right. So step one is gather all your documents. You need your passport, your F-1 visa details, your I-20 form.
The I-20 is key.
Crucial. Also, any W-2 forms if you worked on campus, and potentially that Form 1042-S if you got certain scholarships or stipends.
What about the 1098-T schools send those out for tuition?
Good question. You might get a Form 1098-T from your school, but here's a key point for non-residents. Generally, you cannot use the 1098-T to claim education tax credits like the American Opportunity Credit or Lifetime Learning Credit.
Oh, really? Why not?
Those credits are typically for U.S. residents, citizens, green card holders, or those who meet the substantial presence test or elect to be treated as residents. As an F-1 student in your first 5 years, a non-resident alien, you usually don't qualify for those specific credits claimed on Form 1040.
So the 1098-T isn't very useful for filing the 1040-NR then?
Not directly for claiming those major credits, no. It's good to keep for your records, maybe cross-reference amounts, but don't mistakenly try to use it to claim credits you aren't eligible for on your 1040-NR. That can cause problems. And finally, you need your SSN or ITN.
Okay, documents gathered. What's step 2?
Step 2, determine your tax status. We covered this, but it's vital. If you've been on an F-1 visa for less than 5 calendar years, you are a non-resident alien, NRA.
Less than 5 years NRA.
Which means you must file Form 8843, even with 0 income, and Form 1040-NR if you did earn income.
Got it. Step 3.
Step 3, choose your filing method. We highly recommend using tax software designed for non-residents. Sprint Tax is very popular, user-friendly, handles the treaty stuff automatically. It does have a fee, though.
Okay, Sprint Tax, any other options?
Yes, Glacier Tax Prep is another excellent one. Check with your university's International Student Office. Many schools provide free access codes for Glacier.
Oh, free is always good.
Definitely check that first. There are also VOC sensors, Volunteer Income Tax Assistance. They offer free, in-person help, sometimes geared towards international students, but availability varies.
What about the IRS free options?
We generally advise against using the standard IRS free file or free fillable forms if you're a non-resident filing 1040-NR for the first time. They aren't really set up for the complexities of non-resident status and treaty benefits. It's easy to make mistakes.
Stick with Sprint Tax, Glacier, or VI then. Makes sense. Step 4.
Step 4. Claim your U.S.-India tax treaty benefits. Don't forget this. Under Article 21, you're claiming that $5,000 income exemption and the ability to use the $14,600 standard deduction.
The big advantages.
Exactly. If you use Sprint Tax or Glacier, they'll typically handle applying these benefits automatically based on the info you provide.
And if filing manually?
If you were brave enough to file manually, you'd need to attach what's called a treaty disclosure statement. It's basically a specific statement where you tell the IRS which treaty article you're using, Article 21, and what benefits you're claiming. Software handles this behind the scenes.
Okay, claim the treaty. Step 5.
Step 5, file your forms. So you'll file Form 8843, mandatory for all F1s, and Form 1040-NR if you add income. And don't forget about state taxes.
Ah, state taxes too.
Yes, most states with an income tax require a separate state tax return. The rules vary wildly by state. Some states like Texas, Florida, Washington, Nevada, they don't have a state income tax at all.
So you need to check your specific state's rules.
Definitely. Check your state's Department of Revenue website. You can usually mail your federal and state forms, or if you use software like Sprint Tax, you can often e-file them, which is faster and easier.
E-filing is convenient. Okay, step 6.
Step 6. Receive your refund or pay any dues. If you overpaid taxes through withholding, which is common for Indian F1s due to the treaty benefits, you'll get a refund. You can choose direct deposit to your U.S. bank account, which is fastest, or get a paper check mailed.
Direct deposit sounds easier.
Usually is. If, less commonly, you actually owe taxes, you can pay online through IRS Direct Pay or other options on the IRS website, or mail a check.
Okay. And the final step?
The final step, step 7, is simple but important. Keep meticulous records. Save copies of everything you filed, your 8843, your 1040-NR, any state returns. Keep copies of your W-2s, 2042S, proof of refund received, or payment made. Keep receipts for tax software too.
Keep everything. Good practice.
Absolutely. You might need it for future reference, for visa applications, or just for peace of mind.
That's an incredible, really clear step-by-step roadmap. It really does highlight the immense value of understanding these details. Like you said, it's not just about compliance. It's genuinely about making sure you keep the money you've rightfully earned while you're here studying. That can be such a huge relief for students managing tight budgets.
Precisely. And, to maybe wrap up our deep dive, let's crystallize some of the most common mistakes we see, framing them as actionable advice. Things for you, the F1 student, to really watch out for to ensure a smooth financial journey.
Yeah, the key takeaways.
Okay, first, do not file Form 1040 if you are a non-resident alien. Always use Form 1040-NR. Using the wrong form is probably the single biggest error and can cause you to miss out on those crucial treaty benefits.
Use 1040-NR for the first 5 years.
Got it. Second, never forget to file Form 8843, even if you had zero income. It seems small, but it's mandatory for simply acknowledging your F1 status and presence to the IRS. Don't skip it.
File 8843 no matter what.
Third, always claim the India Tax Treaty exemption under Article 21 if you file a 1040-NR. That standard deduction and the $5,000 income exclusion is a significant financial benefit. Don't leave that money on the table because you didn't know or forgot to claim it.
Claim Article 21 benefits. Crucial.
And finally, number 4, be vigilant about Social Security and Medicare taxes, those FICA taxes.
Right.
Double check your pay stubs. Ensure your employer is not deducting them from your pay for on-campus work related to your F1 status. If they are, know your rights and how to get that money back using Form 843 if needed.
Check for FICA. Get it back. It's wrongly withheld.
Exactly. Being well-informed, being proactive about these things, it really is your best defense and your best tool for financial well-being while you're studying here.
Fantastic points. Really practical advice. Being proactive and informed will undoubtedly make your financial life much, much smoother as an F1 student. All the best with navigating the U.S. tax system, and we will meet again with another important subject in the next meeting.